Let's move on, focusing on your portfolio, because knowing when to diversify your portfolio can be quite challenging, and even more so when equities are on the rise. Share some guidance here. Brett Gottlieb is with us, president and founder of Comprehensive Advisor. Brett, we just finished setting up with what happened this week, right? It was just selling, 5 days in a row of selling since last Friday. Your thoughts on why this pressure is here and if it's here to stay?
Thanks for having me, Nicole. I think that we're going to continue to see some of these adjustments and these sell-offs. You have to remember, obviously, with everything else that's going on just in the market in general and the outlying impact, the market's run up significantly since COVID last year. And so people have significant gains. And if you're doing the right kind of diversity and reallocation, you realize that, hey, I've gotten overweighted in a particular sector, or I've gotten overweighted in a particular industry, and now's the time. I don't want to be too greedy. I don't want to be euphoric. Let's kind of trim some of that off and move it into and make sure my portfolio is appropriately allocated still, and that I don't let it get out of balance.
So this is why diversification is so important. I mean, what do we do in this type of environment? What do you suggest to your clients?
So I think the first thing you want to really be focusing on is, one, do you have a diverse portfolio? Are you too heavy in a particular industry? And if you are, now is the time, especially with a lot of the question marks that are going on in the marketplace, start shifting some of that. And just as much as you may move into the market through what we call dollar cost averaging and buying parts of a position a little bit over time, you can do the same thing in reverse. When you get up 20% or more in a particular holding, look at those profits, pull those profits off to the side, move them to a cash position of comfort, find a new area that you want to move into that has upside, that's maybe undervalued, and then start dollar cost averaging back into that particular position. You have to, of course, take into considerations the tax implications of that, making sure, are you in an after-tax account or a pre-tax account? And I never want to allow tax to be the deciding factor on my investment decisions, but I also don't want my investment decisions to be made without the consideration of tax, and especially in the world that we sit now. So look for those areas of opportunity of saying, I've got some gains. I don't want to be greedy. We've all probably seen the chart of the market and the euphoric state and the fearful states. Don't be that way, because there's a lot of fear right now too. Just be cautious and make sure you continue to rebalance and diversify that portfolio over time.
So what else should they be considering? Because I think that, we love to say that we're going to diversify and we're not going to put our emotions into it. I know getting too excited or too nervous, both can be detrimental too.
No question. And I think that's where a lot of times you should work with a professional, work with an advisor, because if you really just, you're doing it yourself, you tend to have that emotional tie to it. And so we want to try and minimize that by setting a structure, knowing and looking at the bigger picture. What is your ultimate goal? What are you trying to accomplish? Are you 20 and you've got, many years ahead of you of building a portfolio and saving towards the future? Or are you already in retirement? You're in your 60s and 70s, and it's like, hey, I'm concerned about what's going on in the marketplace. How do I position this? And being aware that you need to make those changes, watch, shows like this and see, what are we talking about? What's happening? Things like the conversation with Scott recently with the Apple position and what happened today. Is there opportunity there with the changes with Peloton? Is there opportunity? It's understanding and following the market the way you want, if you want to be doing it yourself. Otherwise, getting somebody that can help you and make sure that you're meeting your ultimate goals.
Tell me about the tax implications of rebalancing allocations. That's something that you wanted to discuss, and I think it's important for people to get it spelled out.
Yeah, so right now you're looking at, from a tax standpoint, if you have assets in an after-tax account, this is your brokerage account, your trust account, you've purchased a particular stock or mutual fund or exchange-traded fund, and it has appreciated over the last year plus. If you go to sell that position and it hasn't been a year, you run into the consideration of short-term capital gains, which are taxed as ordinary income. If you've held it over a year and a day, you've got your long-term capital gains, and it's taxed at the long-term rate, depending upon your other income sources. It could be 0, it could be 15, or it could even be 20. And there's a big consideration of changes coming down the line from the IRS and from ultimately the federal government on what that's going to look like. So if you think that I've had a big gain and a big run up, don't just run and sell that immediately. Make sure to talk to your CPA, talk to your financial professional about, okay, what's the impact of this transition? And then you've also got the ability to, maybe you have some losses. If you have gains, those can be offset by losses. So maybe you want to cut your loss on a particular position in this adjustment or rebalancing of your account, and that gives you that opportunity to do so and not have as big of a tax impact.
Right. And great to be fully invested. Isn't it wonderful when your money's working for you? But at the same time, I think it's worth noting that people should sort of put aside a certain amount, right? Whether it's something that comes up, a car, a house, a friend, a surgery, a child, I don't know. You might need some extra money for something. I mean, you should have some that's more liquid.
No question. So, always suggesting an emergency fund, a pot for those rainy days, things that come about. I had a conversation with a client today and ultimately was telling to him, hey, you've had some great gains and you're a little concerned and skittish on the market. Then let's carve some off on the sideline and sit in cash, both for that rainy day, because this person in particular didn't have a lot of cash usually available. And so you've got it for you, or just to be prepared if the market does come down, as we've seen some of the big banks are saying, hey, we're expecting this 10 or 15% before the end of the year. Well, great. If you have some cash on the sideline, you end up not needing it for those particular needs. Maybe now's an opportunity to buy back in.
Right. Brett Gottlieb, great to chat with you. Thank you very much. President and founder, Comprehensive Advisor. Thanks, Brett.
Thanks, Nicole.